The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, folks, this is Larry Pesavento, and what I did today for the Tiger TV posting, I put in a painting that is on my wall. It's a very large painting. It's about, I think it's 4x4, and it's an oil painting done by someone who, her husband was my accountant at Drexel. This was going back many, many years ago, but these were the rules. There are 10 rules there that I try to abide by, and it's real. I'll just go through them quickly, and then we'll get into the show. We just had a major crop report in the grains, and what we're doing is we're having a big sell-off, which is what we were hoping for. So we'll cover that. Rich Anderson's going to be on at the half hour, and we'll go over it. But this is an ideal situation. If you remember, we had the same thing happen, in the last March. The market sold off, badly, and then it, turned around. So we'll see. But these 10 rules are basically, number one is unbreakable. If you do this, just quit trading, go flip burgers at McDonald's. Never add to a losing position. Dumbest thing you can do. You do that, you're increasing your risk, and you're already wrong in the market. I mean, what else do they have to tell you? Number two is when in doubt, get out and stay out. So if you don't know what you're doing, just get out. Plan your trading and stick to it. Don't watch the monitor. Just put the order in, execute the trade, and go on to the next one. Number four, take equity out for rainy day periods, either to help your family, to help somebody else, or do something constructive. Always take some money out. It's always a good thing to do. Never close a trade without a reason. This was Amos Hofstadter's, one of his most famous rules was when we were at Commodity Corporation, that was on his doors. Never close a trade without a reason. Stops are placed for protection. That's why you want to use them. The market's not going to protect you. You're the only one that can protect yourself. Number 7 is the only true facts in commodity trading are fear and greed. That's stock trading too. Never allow a substantial profit to become a loss. In other words, if you got a big profit in something and it goes to a loss, you've got a mental problem there. Number 9 is distribute your risk equally over several markets. And number 10 is never hedge a losing position, which is very similar to number 1, because some people don't want to take a loss, and so they buy something against it, and that doesn't change anything at all. I want to tell you a story that happened this morning. I acted as a consultant for someone, and the person had a very large account, multi-million-dollar account, and he's gone through a divorce and lost his children. His father passed away. He had another gentleman renege on a very large debt, and all through that time he was trading for the past 18 months. And my question to him was, did you lose 30% or 50% of the account? And the answer was he was still profitable, but he was ready to quit. And I said, after 18 months of going through the worst possible scenario that you could possibly do in trading, I said, if I could buy stock in you, I would buy stock in you. Because if you can make money going through those types of environments, when those things change, that guy is going to get back really, really on top. He's just down on himself right now because he hasn't made any money. But the fact that he did not lose any money with those two negative things, death in the family and divorce, is truly amazing. We had a full-time psychologist at Commodity Corporation on Mount Lucas Road in Princeton when I was there. And if you had a death in the family or a divorce, you were put on an automatic sabbatical for 3 months. And the first 9 months after that, you were under peer review at all times, because that's how important they thought that happened to be, at that particular point. So now we're going to get to the commodity markets, and I want to start out with the one we talked about last week, and that is the cattle market. last week on the show, cattle were trading around the 125 level, and we were saying that you had all these A, B, C, D patterns there, and you had the 3 drive to a bottom pattern there, and you had the cycle expansion there, and like I mentioned, it was Mother God and Country. Fortunately, a blind hog picks up an acorn every once in a while, and this one has exploded to the upside. It's up close to $2,000 right now, and there's an example. You don't want a big profit, to go to a loss. So this would be a place to take a potential profit, with the exception that you left that big gap this morning. And I would think that it might not fill that gap. Even if it filled that gap, you'd still be up $800. So, handle it the best way you can. What I'm doing is we take a little bit off today, and then the rest of it, which would be 2/3 of the position, we would raise our stop to that we would guarantee a $400 contract per trade. So this is the one that we're looking at right now. It's finished now. We have to get ready for the corn market, and Rich will be on at the half hour. We were fortunate enough to get a very, very negative report today, which is really good, and that's an ideal situation, for getting ready to buy. I mean, it's amazing. They sell things off so that they can buy them at a cheaper price, which is, you can't ask for any better any better way of doing it. Now, I wanted to bring out something that we also talked about this last week when it was occurring, since we were talking about the market, the livestock market. We talked about the hogs, and they also hit a 61% retracement over the last 9 months. That was down at 77, and now they're trading 3.5 cents higher. So I watch these numbers, and that's really what I'm looking at when I'm trying to pick some of these patterns that we're watching. Someone asked, hate to bring the subject up, but someone asked me a question about Apple, and if you'll give me a second here, I will pull it up, because we talked about it last week too, and I'll pull the hourly chart up, because that, I think, shows the best of what we're looking at. I'm going to put in the Apple chart that we had here for the past 10 weeks here, and it'll show that we've the rally that we had just recently was exactly like the rally that we had in February, almost to the exact penny. And now what we're doing is we're coming down, and I still think we've really got a chance to make the see if I can get the chart in there. If we can make the level of 394 for the let me think, for 394 per share in the Apple computer. That's only $50 away, and if it doesn't work, then we'll see. But if the market does turn from here, and we're really close, the market's gone nowhere. The Nasdaq has really gone nowhere, and that makes it a big difference to. I'm going to try something different here and see if I can get this chart to post. See if this chart posts better in the Tiger TV, because I'm not. I'm very technically challenged when it comes with computers, as most of you know, and so when I have to try to do something new in the middle of a radio show, it becomes a little bit of a disaster. But the price objective, just based on these last swings, will make the price of Apple get down to that level, and it's of 394. So we'll have to wait and see if that's going to happen. But we're going to know more about that a little bit later. I did post into Tiger TV real early this morning the Nasdaq chart, and we've completed this pattern in the S&P and in the Dow Jones Industrial Average, but the Nasdaq just keeps getting weaker and weaker and weaker and weaker. It looks like copper did before copper, finally, came unglued to the downside. So I don't know when this market's going to turn over. It could be within a day or two. All these targets are still there. They haven't gone anywhere. I mean, we're in about 5 points to where we were a week or so ago in the S&P and also the Dow Jones. So we'll understand or later. The fact that it's handled the news from Cyprus relatively well, I don't know if that means anything or not, but I think it was a test across the bow, to see if, in fact, that was going to, really mean anything. The main one that we're going to be talking about, and we're going to have Rich coming on at the break, but I want to bring up the corn charts, because this is a real critical level. The first one that I'm going to bring up, and believe me, corn is down, about 20 cents right now, which is a lot in corn. But we've had this beautiful 786. Oh dear! You know what I have to do is I didn't label this as December corn. I hope the people can understand it when they're looking into Tiger TV. But anyway, we've held this level at the 545 level in December corn, relatively well. We're having the big sell-off today. The high that we made 2 days ago was a 61% retracement of the high we made way back in February to the exact tick. I'm going to mark this as December corn because it's new crop corn, and it is certainly different than the others. And I want to because old crop corn will have a totally different chart. But I'll put that in, and you'll see that the high we made just a few days ago at 30 cents higher was exactly at a 61% retracement. So now with this really wide-ranging bar today, you're going to have to go down to an hourly chart. But frankly, with this wide-ranging bar today, I would wait a day or two, to buy the corn. We'll get more information from Rich Anderson from Anderson Capital Management when he comes on at the half hour on the overall report for wheat, corn, and beans, because he follows the fundamentals as well as anybody. But this is a great opportunity, folks, as I can see it, because this is what we've been waiting for. We waited for it last year, and it worked out really well. And so I think if we are patient, we should be able to, do the same thing this year. And, we always have one or two crop scares every year. That's like Mother God and Country. That never changes. And, that's what we'd be looking for, is to try to, find, something like that. I'm going to put the nearby corn, which is the May corn that, is being traded. That's old crop corn. And you'll see the same situation is still unfolding exactly like we'd hoped that it would. I mean, it's just really beautiful the way that it's acting. We're looking for another maybe 15 or 20 more cents to the downside, and that would really be a wonderful place, to look at the market for a move to the upside. And that, remember, that'll be coming in towards late April, and then that'll be a really good sign for this. We got to take a little break to pay a few bills for our leader, Mr. O'Brien, 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and I'm going to switch over to the gold and silver because I think we have a really nice pattern forming in the gold market. It looks like we've got a really good chance to get down to that 1582 level, which would be a very large AB equals CD move, to the downside, which is in a higher trend because, we're coming off the low of 1525. That looks, quite positive. Now, 2 days ago, on the full moon, we made a ABCD move to the upside that stopped right at that 1607 level. I sent quite a few charts on it about that several times, but this still isn't an uptrend. It's having a correction. Whether we get down to this 82 level remains to be seen, but we're only $14 away. That's the same amount that we've given up since yesterday, so it'd be very easy for it to reach that level. So we want to watch that very closely. Now, there is a caveat here with the gold, and that is, the problem is that we've got silver lagging very badly again. I posted into Tiger TV the 60-minute chart on silver going back a month, and over that I have overlaid the price of gold in a red line, and you can see that the price of gold has been very, very strong, compared to the price of silver. The reason for that is quite simple. Silver is more of an industrial metal than it is a precious metal. Even though it is beautiful and it shines nicely, of course it tarnishes pretty easily, but it really is an industrial metal. Most of the usage is industrial, so that's the real difference. The fact that gold has held up this well, I think, is very well. Remember, you can transport a great deal of money in gold at this price at almost $1,600 an ounce. when I first started trading gold, it was $180 an ounce. So you can imagine how much money you can transfer. And gold is easily accepted, on a worldwide basis. Most people recognize, a Cougarand, a Maple Leaf, or Austrian Krona. They recognize, and of course the U.S. coins, they recognize those easily. But the problem with silver is it's an industrial metal. It trades nicely, but you have to risk, because it's 1/6 the volume of the gold market. It literally, has a lot of spots there where you can run into illiquidity and get a very, very, very bad fill. So that's what I'm seeing in that. The copper market is still a dog. I mean, you can paint it any color you want, folks, but, the market keeps rallying up into new highs and copper keeps going lower. I don't know what a bigger message they have to do to send it to you that there's something wrong out here somewhere, because that's the problem, that we're having. And when you look at the international markets, that we've had, they're making some, really, big tops also, which, they're really quite amazing. When you take a look at. I'll post I wanted to show you the one for the London market, because what it's doing, it's an incredibly, beautiful technical chart. It shows the patterns that are forming, the 3 drive patterns, the retracements from the 07 high, and it's really a beautiful chart. It comes from our friend in New Zealand, Graham, who does a great deal of work and is quite an avid trader. So this is a chart that if you get a chance, you can go into Tiger TV and study it. It really shows that all these objectives are being met, not only just in the German market, but also, in the UK market, but also in the German market as well. So these are the ones that we're watching the closest. So we'll think that's it. Someone asked me a question about West Texas crude, and what I'll do is I will bring crude up, because we are right up at the 61% retracement today. We went a tad above it, not by very much. I mean, it was just a few cents, but it was. Just give me a second here. It was right at the 786. I have to refresh my charts, and then I'll put this in here, and you'll see that we stopped right at the 786 retracement here. This is, I think we even talked about this last week too, that we had that ABCD form, and that gave us a price objective up around this 96 dollar level. As a matter of fact, one of the trades that we did today was to short crude. We sold it at the 96.50 level. 15 cents higher than where it is, lower than where it is now, but that is a completed pattern. We don't know if it's going to work or not, but it's certainly in a bearish pattern. If you look at crude oil, you've got lower tops, since last February. You're talking over a year of lower tops in crude. This ain't a market that's going up, is my opinion. Okay, we got to take a break. 877-927-6648. We'll be back with Rich Anderson.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and I think we have our friend Rich Anderson on the line.
Hi, Larry. How you doing?
Well, I'm okay, my friend. Once again, you gave us some good ideas on the grains. They're coming down into the areas that you talked about. Can you tell us about the crop report? And tell Rich, a lot of the folks here don't trade commodities, and they're not familiar about the importance of these crop reports. Could you just give an overall view of, when we get these big ones? And this is a big one, right? This is a really big one. You explain to them, as a professional, what you guys look at.
Well, the USDA, the United States Department of Agriculture, puts these reports out. This is a quarterly report, comes out every 3 months, and it gives you an idea of the stocks. So they get stocks on wheat were $1,230,000,000, and the average guess was $1,167,000,000. So there's way more wheat than they expected. And what that means is that there was less usage. And the reason there's less usage is because the dollar is much, it's been so strong, number one. And number two, we've got a lot of competition from around the world. In wheat and corn, we've got Ukraine. In corn, we've got the Ukraine. We've got Argentina and Brazil. In beans, we've got Brazil and Argentina. The average world corn price right now is 75 cents to $1.15 underneath the U.S. prices. Well, that's changed today with that 40-cent drop in the market. The corn number came in, that was the astounding one, came in $5,400,000,000. The average guess is $5,030,000,000. So that means that they found 370 million bushels of corn, which means the high price has slowed exports, slowed the grind of ethanol and slowed feed usage. And the same thing on soybeans. Came in with 1 billion bushels of beans, and they were guessing 947 million. You know,
now, isn't corn limit down, isn't it?
Say again? Corn is
limit
down. And by the way, for those traders that do trade commodities, don't get misled that, there's 100,000 contracts to sell limit down. Because if I'm a commercial and I want to get some corn off, I get like 5 or 10% of if there's 100,000 offered. If I put in 10,000, then if they any trade, I get a percentage of that based on how big my order is. And of course, my order is controlled by a computer. So if all of a sudden the offers disappear, my offer's gone too. I don't necessarily want to sell 10,000 contracts, but in order to get my fair percentage of whatever does trade, I put a huge, I keep my order as a percentage of the total amount offered. And that's why the pools look so big. They aren't necessarily for real. That's the point I'm trying to make.
That's true. Now, can you explain to the folks, what a limit move is in, because they don't have these limit moves in stocks and in Forex and stuff, so can you explain to them what that limit is and what it means?
Well, limit down means that you can buy all the corn you want, but you can't sell any because there's no buyers.
That's not a good thing.
In actual fact, the commercials and professional traders will use the options, and they'll calculate what, they'll give up on the puts and calls to exit positions, whereas your average person, it's limit down, there's nothing I can do for the day. The commercial and the professional traders using the options to liquidate positions if they want to liquidate positions. And as an example of that, corn at limit down is $6.95 and a quarter. Let's make a quick calculation here. The $6.95 put is going for 27 cents. $6.95 calls going for 15 cents. 15 minus from 27 is 12, roughly. 12 cents under 6.95. We're currently really trading at 6.83.
So down another 12 cents from where we are now.
You put in a call and subtract it from the strike price, and that tells you where if you wanted out right now, that's where I could get you out at 6.83.
Wow. Rich, you remember years ago, we're going back 40 years, but, we never had these options and stuff to do this kind of stuff. When we had these crop reports, we were literally, if you happened to be on the wrong side of one of these things, you were literally trapped in there for several days. And remember, our limits used to be, like 10 cents in corn and, 15 or 20 cents in beans. It was nothing, and it was, agonizing if you happened to got caught for 4 or 5 days in some of these moves. Of course, I know you were always on the right side of them, but, some other people weren't.
It would snowball on you. But
yes,
now
that's correct.
What happens is that limit of 40 cents will get adjusted to 150% or 60 cents come Monday.
Okay, now, do you think that the firms will start, raising the margins in order to protect themselves, or will that?
Well, the exchange automatically does that with something called span margins, which is they take your margin times think of it like as a delta. If the average volatility is 20 cents and all of a sudden you're trading 40 cents, that margin will increase proportionally. The exchange automatically will do that tonight. So the margin calls will go out Monday based on this volatility.
Yeah, because we'll be closed tomorrow because of the holiday.
Right, because of Good Friday we're closed, and then we open again on Monday. The other thing that anybody that does trade futures needs to know is a week from Monday, on I believe it's April 7th, we'll have the new hours of trading, and I'm sure you'll want to post that on your website for anybody that's interested. Sunday, April 7th.
What do you mean the new hours? I wasn't even. They're changing the hours on the grains.
They're always changing stuff, Larry. Yes. Yeah. Back in the old days when we got into business, because the markets opened at 9:30 and closed at 1:15, and those were the kind of hours you could love. Nowadays it's 24/7. Sure. The CME went to 24/7 hours practically.
Yeah.
Take away the ICE contracts the ICE exchange that tried to do grain contracts. And now that they basically killed that effort, they're going back and instead of opening at 9:30, they're going to open at 8:30 and close. I believe it's at 1:45, and then reopen on I'll send you an email on that, and you can post it or send it to whoever you want.
I think we will, because I basically have everything set up for 24 hours, so it doesn't affect me too much with that. But I understand that they're moving the E-mini S&P out to another hour. Going to trade an hour past the normal time. Is that correct? It's going to go out to 5:15 instead of 4:15. I saw a memo on that.
Right now, the E-mini only is closed, I thought, for 15 minutes.
Yeah, they've changed something, but I'll have to figure out, what it was. But I'm not exactly sure.
They're constantly changing the hours and the limits. But the key thing is, if you have more than the front three options are down the limit on any grain, they'll go to 150% limit for 2 days. And if they were limit down on Monday, then they go up and increase the range again.
So that gives a person a chance to get out, even though he's lost all his money.
Right. But in those days, when we would get locked into markets, you didn't have options. And
that's right.
Right now, you can get 683 because you take the price of the put and you take the price of the call. 27 minus 15 is 12 cents, and subtract 12 cents from 695, and that's where we're really trading it right now on the options.
Wow.
So you can always get in or out of a market that's limited through the use of options.
Well, that's a good thing to know. It's of course, you and I both know that it's not very smart to have any position going into a crop report. But let's move forward. Last year, in April and May, you start talking about the possibility of some really bad weather coming in and increased demand. And now what we're having is we're starting to give our grains away, getting back to normal prices. This is setting up for an ideal situation coming into late spring, isn't it?
Well, absolutely. Absolutely. And keep in mind, last year we looked like we were having bumper crops up until the 4th of July. And then the moisture pattern changed, and we just didn't get anything. But by the way, the Chinese had canceled some purchases of beans back $1 higher, are now starting to buy them back.
Of course, the Chinese are great traders, as we know. They're always in there saying something and doing the opposite thing, which most big traders do anyway. So it's not a big mystery there.
Oh, absolutely. Yeah. Absolutely.
Rich, looking at the total complex between the corn, the wheat, and the beans, which you think has the best long-term potential? Coming into the end of spring. When we get into the growing season.
Well, for the next 3 months, given this report today, it kind of changes everything and takes a lot of the edge away. And by the way, there will be a supply and demand report on April 10th, and that's the next. It won't be as big a report as this, but they could throw a curveball at you. The last report prior to this one, they found 250 million bushels of demand. This report, they lose 370 million bushels demand. Who knows what they'll do on the April 10th report? But right now, I'd have to say it'd be the beans because there's good crush margins in China. The Chinese are starting to come back in and buy the actual cash beans. They'd like to buy them out of Brazil, but there's 50, 60-day wait for boats. The line of ships waiting to come into port and load out it's unrealistic. Once that's solved, and that'll be solved in 2 or 3 months, then it's a whole different ballgame. But between now and then, I think the beans probably have the best potential, and we could get another curveball in the April 10th report. The government loves the surprise.
How do you keep track of transportation of boats? Do you have a service that does that for you, or what?
Freight brokers.
Wow. Well, folks, that's what happens when you look at the fundamentals. You're looking at everything possible, that's for sure.
Yeah,
okay, let's switch over to the livestock market. We had a little bounce in the cattle. Do you still think that long-term the cattle look pretty good?
Right, but keep in mind the rally in the cattle in the last 2 or 3 days here is twofold. It's one, it's based on the cash market improving, and two, option expiration is a week from tomorrow. It's next Friday, and so the gamma guys, the guys that are short calls, when the markets go vertical, have to adjust their positions, and so every time it goes up 50 cents, they have to buy so many contracts, which pushes the market up another 50 cents, and then they have to buy so many more contracts, and then once they've got all the gamma guys chased out, then the market starts to drift back down. Now, there were some rumors of some 129 cash trades in Texas, which were unfounded, we have had some 128 sales, and that's what's brought the market up this week. I think the hog market is probably the one that has the best potential over the next 3 months, as I think the numbers will be relatively low. That's provided that we don't. Yesterday there was a rumor about a sickness of some hogs that would hurt our exports if it was unfounded, which I believe it to be the case. The key is the export market. Keep in mind that yen has been weak, and they're a big buyer of pork from the U.S. So as their yen went down, that made our pork more expensive to somebody sitting in Japan.
Okay. Well, Rich, listen, I appreciate you coming on again, and we'll have you on after we have the stocks and all positions reports on April the 10th, and have a wonderful Easter with your family, and tell them all I said hello, okay?
All righty. And good luck at the conference. Bye-bye.
Okay, bye-bye. Okay, folks, that was Rich Anderson of Anderson Capital Management, and so we're going to keep an eye on corn, and we're all going to keep an eye on the cattle, of course, and, of course, soybeans and wheat as we go through the commodity hour. Now, let's switch over to copper for just a minute because, the copper is still, coming down. It didn't rally, and, this is a, high-grade industrial metal, and why this market is not going up, given the fact that we've had such a big move, in the stock market is truly amazing. It's done nothing but go down, and everything says that it's not going to stop going down. At least that's what it looks like. We're having another break today, and it's almost ready to take out the lows of last week after rallying for 3 or 4 days, very, very modestly. So, copper still looks like it's got a lot farther to go. Anything below, if we're at $3.41 per pound now, and if we get below $3.35 a pound, that's going to break the 786, and that sets up a target of below, $3 a pound. You have to ask yourself the question, folks, if you're, looking to buy copper, why can't copper rally with the rest of the market? Going, up in the stock market, because, most of the stuff that's made that's anything close to electronic always has copper in it. And so that's telling us that demand for copper, is not nearly as prevalent as you would like to see. Now, remember, we've been watching the Chinese stock market, and that thing has just been, it's been dropping, and it dropped big time yesterday again. And, I think it's something that, they talk about how important China is to the rest of the world, but in fact, the Chinese market keeps dropping. That's not a good sign. If you're looking at the economy itself, that's what I think is another negative divergence of the things that that we're looking at. I'm going to put the you'll see that the move in this. I have to update the chart just a second because they have some slight data problems here, and we'll get it fixed here. But you can see that we've broken over the past few weeks when the rest of the stock market's going up. We've been coming down in the Chinese market, which is not a negative, not a positive sign, for the overall economy. Someone asked the question, about the general economics of the world and everything, and I think after listening to Rich Anderson, who's one of the smartest people I know in the futures business, he knows so much information that I have to clear my cobwebs out of my head because I couldn't keep track of it all. Thank God I can ask him a point blank question. We got to take a break here. 877-927-6648. And we come back, we're going to take a little closer look at Treasury bonds and gold.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, so we're going to wind up the show with a couple of what I think are important charts. Well, I think they're all important, but that's my opinion. I'm going to put the 60-minute gold chart in that I did earlier in Tiger TV because someone had a question about how I measured the AB equals CD leg. And if you'll take a look at it, you'll see that the AB leg, came down about exactly $35. And then we had a 61% retracement, which was $24. And now the next leg down, which would be point D, would take us down to the 1582 per ounce level. Now that's very important because that'll be the 61% retracement off of the low at 1562, and if you remember, the low from 1562, that was a 61% retracement of the low from 1525. So this would be our third higher low, and second higher low, and that would be a very low risk buying opportunity if there is such a thing as low risk anymore. But you have to risk about $10 when you trade gold because it's a $159,000 contract. But what it looks like as we're on the air today is that we're heading down towards that 1582 level. That's what it looks like. The next one that I wanted to focus on is the Treasury bond market. And the reason why I would like to spend just a little bit of time with this is because we've just had one of the worst, well, not one of the worst, but a very bad situation occurring in Cyprus, as you all know. And usually a flight to quality will occur, and this did not happen in Treasury bonds this time. We've only been able to rally 4 points. You know, the last time we had something bad happen, which was way back in October, the rally was more than 7 points, and it was not near as bad as what we had happen with Cyprus. So this Treasury bond market is literally, you know, tipping over, you know, as we speak. And I would love, I mean, if we could get a rally in the Treasury bonds up to that 148, 149 level, I would think that would be the greatest Christmas present that we could get, because that would be a very, very low risk shorting opportunity. But given the fact that the market is not rallying much with really good news, you know, at least for Treasury bonds, that in itself is a bad sign. So keep in mind. Remember that we're having a lot of divergence now between the NASDAQ and the Dow Jones and the S&P 500 and the New York Stock Exchange Index, but the New York Stock Exchange Index is still the big one to look at, and it hasn't broken anything. It's not, you know, they're talking about it on the news today, the Dow making new highs, the S&P. They've got a little clock on CNBC showing about how many points it is for it to make a new high. I think it's a point or two away of making a new high from 2007, which doesn't mean anything. I mean, just completing a swing. I mean, it's not a big deal, but they're reporters. That's how they get. That's how they get paid, is to get the, you know, advertisers come in, so they have to stimulate some information. So just remember here that someplace down the road here, we're going to have to be putting on a position on the short side, you know, of Treasury bonds, because they're not acting, you know, very well at all, given the news and the fact that this 32-year bull market that we've had in bonds looks like it's finally coming to an end, and interest rates are going to go higher. If you've got a chance to refinance now and get a rate under 4% for a 30-year mortgage or a 15-year mortgage, I would certainly highly recommend that, because you know, you and I would not loan anybody money for 30 years at 4%. I mean, there's just too many variables. That's it, folks. Live every day in an attitude of gratitude. Have a wonderful holiday with your families. And remember to help someone that has less than you. May God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.